Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Hello everyone, going to look in here at Weed, APH, ACB, EMC, Fire, and HMMJ on the daily and weekly time frame. So what we have developing is the pattern that the bulls are looking for. So when we come straight off the lows, we're not going to change the trend on that bounce. What is required to change the trend is to see a bounce to consolidate, form a higher low, and then get a higher high. So the consolidation that did occur after this bounce was beautiful for those bulls because it was declining volume, very, very contained, and it was a nice entry opportunity. So if you didn't get the bottom, this was your entry opportunity, and you could use the bottom as your stop loss level. So we do have the beginnings of a trend change on the daily time frame. If WEED can break 824 and start to see some upside from there, then we know that the short-term trend is changing. We see the volume coming in here, a big green candlestick for these bulls, and we're going to see what kind of follow-through we can get next week. That being said, on the weekly time frame, this is just the start of a potential trend change. So what I am doing is looking on the weekly time frame because I'm looking multiple years out. So I'm not really that interested in the daily time frame. If you're looking for shorter term trades or if you're trying to time the bottom and get an ideal entry, then you're using the daily time frame. But for me personally, I've got lots and lots of people that are looking for long-term entries, and it's going to be, I'm going to take it under my responsibility, so to speak, to give my green light on when I am comfortable with getting in long. So we have our bullish reversal candlestick 2 weeks ago. We didn't confirm it. We rejected from exponential resistance. So as we know, on any time frame, if you are rejecting from exponential resistances, these 4 and 8 periods, you're still weak. And just like if you're bouncing off of it in an uptrend, you're very strong. So we didn't get that confirmation yet. So I'm not confident. At the very least, I need exponential moving averages as support before making a long entry. The good thing now is we do have this base of support of 658 as a level to be watching, and knowing that that support really needs to hold from here on out. So obviously I am bullish in this sector long term. I am looking for a long-term entry opportunity, and I know there are a lot of people doing the same. And there's a lot of people that don't know much about stocks and don't know much about, you know, what they want to do in terms of where to put their money. And for me, my easiest suggestion is Canaidan MJ. And that is because the market is so extended to the upside. The overall stock market since the election 7 months ago, it's just gone straight up. And it's really to the point where the risk to reward of establishing long positions at this point, I feel like there is much better risk to reward with a sector that has been consolidating for 6 months after a breakout and obviously has a really bright future in terms of what is to come. So that is my game plan, and like I said, going to be giving my opinion. I'm not going to be telling anybody when to buy. I'm going to be saying I am comfortable now, and that is not the case yet. So watching exponential resistance and watching to see if we can confirm a bullish reversal candlestick, which again has not happened yet. We have not seen 2 green weeks in a row since back in February. So that is, at this point, that's over 4 months without 2 green weeks in a row. So APH, the names that I'm going to be watching are WEED, APH, and HMMJ. Those are my top 3 that I'm going to be suggesting to people because they're the leaders and obviously because the ETF is a bit more diversified. And the individual names, the other ones, EMC and CMED and Fire, they're all higher risk and higher reward potentials. But just in terms of solid investments for longer term, the more safe plays, those are the 3 big ones that I'm going to be looking at. So APH, we know on the daily time frame and the weekly time frame, is a bit more technically strong than WEED. Same scenario with declining bear volume, bullish entry on consolidation if you miss the initial bullish entry, and close at the high of the day with momentum favoring the bulls into next week. So we have the range to be watching. The low of consolidation is 511, and the high of the bounce was 570. The bulls have to break 570 to see continuation. So those are the 2 key levels right now that any individual name should be watching. The low of consolidation and the high of the initial bounce. So the weekly time frame for APH, same thing. This is not convincing to me. We have our bullish reversal hammer. We saw some follow through, but we rejected from exponential resistance. So we are in a scenario now where we have the 50-week moving average support and the exponential resistance dropping down. And there's also time as a factor here in the sense that we know 2018 is when the doors open really for the sector. to begin sales. But because right now we're in June, this makes me less confident to be getting into long positions now. And that is because we have 6 more months until we're in 2018, and a lot can happen over them. We could still see weakness, and we could still see lower lows. That's entirely possible. We know the summer, at least I know the summer from the US MJ sector, has been very, very slow year after year after year for the past 6-7 years. And it looks like Canadian MJ is seeing that as well. We know sell and may go away is the market phrase that people use, but I'm not convinced. So that's where I stand. But again, anybody that is in has very clear levels to be watching to ensure that the bulls stay in control in this short-term move. And of course, we're watching the volume as well. So ACB on the daily time frame is weaker than the other two. We saw 4 red days. We saw an upper wick, not even closing at the high of the day. I don't like the way that ACB is trading as a bull compared to these other names, so I am not including it in my longer term analysis at this point. So we have the low of pullback is 203, the high of the bounce is 232, and again the bulls have to see a higher high to get continuation. The weekly time frame, bullish reversal doji, not confirmed, rejected from exponential resistance, lost the higher low pattern. I don't like how this weekly chart looks. I don't really like how the daily chart looks compared to other names, so that's why I am leaving it alone personally for now. EMC is another one. Just because we're coming off of all-time lows, the complete lack of support is concerning, and again, a much higher risk, high reward trade. We could see much bigger gains if the bulls do show up, but the lack of support is concerning. So we didn't confirm a bullish reversal candlestick here. We saw the low at 166. Bulls have to break 192, but again, no follow through at this point to be looking back up to that 190. It's actually 191 resistance. No follow through to be looking back up there in the weekly time frame. Not doing anything for the bulls at this point. We are watching the 100-week moving average support, which is holding 3 weeks in a row, but it's exponential resistance driving the price to the downside. No bullish reversal confirmation for this hammer, and not liking this trend. This is all bears at this point. Exponential weekly charts or moving averages on the weekly charts are very important for longer term positions. FIRE, same thing. Lack of history because of the symbol change here obviously makes technical analysis a bit harder, but we have multiple inside bars to be watching on the daily time frame, which is going to signal a short-term trade. A break of 126 is bullish short-term, and a break of 122 is bearish. And if we see another inside candlestick on Monday, then we know Tuesday will certainly see a break. So anticipating a break either Monday or Tuesday for a short-term trade indication. The weekly time frame, again, not much there, and we know that we'll get a lot more history, obviously, as time goes on, but I am not liking, I honestly, to be perfectly honest, I don't like the scenario where everybody's in here waiting for the news and the license and anticipating that. And I just don't like how everybody's thinking one thing. I'm a contrarian in the market to a degree where if everybody's thinking one thing, I'm looking in the other direction. And that doesn't mean I'm expecting, you know, a lot of downside here. It just means that if everybody's thinking one thing and everybody's getting in anticipation of one event, that's just not a scenario that I personally want to be in with the rest of the herd. So absolutely the bulls could see some long-term nice upside once things do turn around and once things get going here for FIRE. But as of this point, same as the other reasons where I just am not looking at a long-term position here. And if you are looking at a long-term position here, this would be a more higher risk allocation of your portfolio. So checking in on HMMJ, and this is what I'm going to be interested in the most, just because this is the easiest to recommend to people that are not familiar with the sector. So the people that haven't done all the individual name research and all of that, if they're going to be looking to get into the sector, this is the best risk to reward scenario for them to get into because of the diversification in the portfolio that the ETF holdings will have. So the higher low has been established here, not very convincing by any means, 821 and a higher low at 830. Resistance is at 874. I'm nowhere near liking an entry here yet, but I am going to be watching longer term on this weekly time frame for things to turn around. We have only seen 2 green weeks in a row in the history here, and it's not ready by any means for a long-term entry, but it will be eventually, and I will be looking at HMMJ long as well. So I appreciate you watching. That's what we've got heading into this coming week. Need to see those higher highs for this bounce to have some momentum behind it. Watching weekly exponential resistances. Need to close over those levels to see some longer term potential trend change. But everything's right now in the very, very early stages of trying to turn things around, and I personally am not convinced yet. And like I said, if we were in October and November right now, I would be much more convinced and much more comfortable with an entry just because of that time factor. And we know the MJ sector does really, really well in the fall, and that is the US MJ sector, and that's usually because of the votes and things like that. But I think we're going to see the same thing in the Canadian sector here due to the approach of the 2018 year and the anticipation of the doors opening for sales. So I am going to be looking for an entry later summer unless we see clear signals before that. So I appreciate you watching. Thanks for checking in, and we will see you next week.